In this video, we will learn to modify the chart of accounts and establish beginning balances. Let's continue with the sample company to learn the process of creating, modifying, and deleting accounts and of establishing beginning balances. Note that we should complete this entire section in one sitting so we do not lose our work. If we do leave and return, the cumulative balances will be inaccurate as our work will not have been saved while working in the sample problem. Let's begin by adding a new checking account with a beginning balance of $20,000. To do this, click Transactions and then click Chart of Accounts from the navigation bar. As we can see, only one checking account has a QuickBooks balance of $1,201. To add a new checking account, click the New button in the upper right-hand corner of the Chart of Accounts window. Click anywhere in the Category Type text box and select Bank. Then select Checking from the Detail Type list and type Checking BOA in the Name text box. Now type $20,000 in the Balance text box and type 12/31/2014 in the As Of text box. Lastly, click the Save and Close button to view the modified chart of accounts, which now includes a new checking account with a balance of $20,000. So far, we have added a $20,000 increase to the assets to the sample company as of 12/31. Note that the opening balance equity account has also increased as a result of this adjustment. To continue, let's add a new product. We can see that the balance in the inventory account is $596.25. To add a new inventory account, click the gear icon and click Products and Services from the List column. Click New on the top right of the screen. Then select Inventory Item from the Product or Services Information drop-down list. In the Name text box, type Stone Tile. Type 500 in the Initial Quantity on Hand text box and 12/31/2014 in the As Of Date text box. Leave Inventory Asset as the Inventory Asset account. Then type Stone Tile in Sales and Purchase Forms and type $2.50 as the price and $1.25 as the cost. Next, leave Sales of Product Income as the income account and Cost of Goods Sold as the expense account, and make sure the Is Taxable checkbox is checked. Then, click the down arrow in the Save and Close button on the bottom right of the screen, and then select Save and New. In this window, select Service from the Product or Service Information drop-down list and type Estimates as the name of a new service. Make sure that the I sell this product or service to my customers checkbox is checked. Type Estimates as the description and type 50 as the price or rate text box. Uncheck the Is Taxable checkbox and click the Save and Close button. Now, scroll down the list of products and services. Note the new estimate service added and the addition of the new Stone Tile product with a quantity of 500. Then, click Chart of Accounts under Transactions from the navigation bar and note the new balance in the Inventory Asset account of $1,221, which equals the previous balance of $596.25 plus the addition of $625, which is 500 units at 1. Till now, we have added a $20,600 $25, which is $20,000 plus $625 net increase to the assets to the sample company as of 12/14. Note that the opening balance equity account has increased as a result of this adjustment. Next, let's add prepaid rent, long-term debt, and common stock accounts. To add a new asset account, click the New button in the upper right-hand corner of the chart of accounts. Click anywhere in the category type text box and select Other Current Assets, and select Prepaid Expenses as the detail type, and type Prepaid Rent as the name. Type $4,000 in the balance text box and 12/31/2014 in the As of Date text box. Click the down arrow in the Save and Close button and select Save and New. Let's next create a liability account. To create this account, click anywhere in the category type text box and select Long-Term Liabilities. Then select Notes Payable as the detail type and type Notes Payable Chase as the name. Type $9,000 in the balance text box and 12/31/2014 in the As of Date text box. Click Save and New. Next, to create an equity account, click anywhere in the category type text box and select Equity. Select Common Stock as the detail type and type Common Stock as the name. Type $1,000 in the balance text box and 12/31/2014 in the As of Date text box. Click the down arrow in the Save and New button and select Save and Close. Now, scroll down the chart of accounts. Note the addition of the new prepaid rent account with a balance of $4,000, the addition of new Notes Payable Chase account with a balance of, and the addition of the new Common Stock account with a balance of $1,000. So far, we have added a $14,625, which is $20,000 plus $625 plus $4,000 minus $9,000 minus $1,000 net increase to the assets to the sample company as of 12/31/2014. Note that the opening balance equity account has increased as a result of this adjustment. Lastly, we will set up beginning balances in accounts receivable and accounts payable by using journal entries and add a new customer and vendor at the same time. Note that QuickBooks Online lets us establish a beginning amount for all of these accounts using basic journal entries. We will do that for accounts receivable, accounts payable. For the other accounts, such as checking, inventory, prepaid rent, long-term debt, and common stock, we have already set some beginning balances when we set up a new account. Before we start to journalize, note the opening balance equity account that has a balance of $5,287. Now, to journalize accounts receivable and payable beginning balances, click the plus icon from the top center of the screen and click on Journal Entry from the other column. Type 12/31/2014 in the Journal Date text box. Then, click in the Account column and then click the drop-down arrow. Select Accounts Receivable as the first account and type $775 in the Debits column. Next, click the Name column, click the drop-down arrow, and select Add New to add a new customer related to this balance. In this window, type Refugio as the new customer and click Save. Next, select Accounts Payable as the second account and type $500 in the Credits column. Then click the Name column, Click the drop-down arrow and select Add New to add a new vendor. In this window, type Rockster as the name. Change the type to Vendor and click Save. Now, select Opening Balance Equity as the account on line 3 and accept $275 in the credit column. Then, click Save and Close to save your work. Scroll down the chart of accounts and note the opening balance equity account, which now has a balance of $5,562.50. So far, we have added a $14,900, $20,000 plus $625 plus $4,000 minus $9,000 minus $1,000 plus $775 minus $500 net increase to the assets to the sample company as of 12/31/2014. This completes our demonstration of modifying the chart of accounts and establishing beginning balances.